Good evening, everybody. This is Jeanette Sims with TradeThirsty. Hubert Senters, my business partner, and I would like to welcome you to tonight's event. We built this company with you in mind, bringing you great minds, great trades, great ideas. On a monthly basis, we do an event just like this where we rally all of the people that we can get into one room to come and see some of the best and the brightest in the business. Tonight, our lineup is what we call our three-man. And if you played a little three-man in college, then you might know what three-man is, and if you didn't, we can talk about that later. But our three-man market mastermind is every other month, and then we do what we call our toast to traders on the in-betweens. So this will be our last three-man for the year of 2015, and we're thankful that you took time out of your busy evenings getting ready for the U.S. holiday that's coming up, if you are getting ready for that. Thanksgiving, of course, is a couple days from now. Tonight we have Serge Berger. Serge hails from thesteadytrader.com, and he's going to be talking about trading candlesticks. I've been watching this guy trade for a long time. He's very smart, very accurate. His topic tonight is just that one candle pattern that he uses that hopefully you can take away with you to help you make your year better, not closing out just this year, but also next year. We will go number 2 up, Mike Smith. He is from HawkeyeTraders.com. He's going to be talking about using volume analysis. And Mike is about a 12-hour time difference from us, so it's a little early where he is right now. I'm at 5:05 p.m. Central, which makes it pretty dang early where he's at. So when he comes on live at 7 p.m. Eastern, you guys give him a big round of applause for time of day. And we'll round tonight's event out with Johnny Seville. John Seville, as some of them might know him as. He's at acornwealthcorp.com. He's going to be talking about the crash. This has been a hot topic, the highs and lows of the market in the past 4 or 5 months, what's going on with crude, what's going on with gold. This guy's got some pretty good ideas that are definitely going to be timely for what you're seeing happen in the market. I want to get y'all to also mark your calendars for our final Toast to Traders of the year. It's going to be Saturday, December 19th. And we've got Hubert Senters joining us with Rob Hoffman, Price Headley, Todd Gordon, Josh Martinez, Larry Gaines, and John Seville. Some of you may know, some of you may not, but that's a full day. That Saturday also will be recorded, but we hope that you'll take time to come out and join us live. We're going to do a lot of fun stuff that day. Might involve giving away some cash. Hadn't told Hubert that yet, just thought that up. So Hubert, get out your wallet. Okay, so we're going to start with Serge. He's our first guy up on deck. And let me start recording inside GoToWebinar just in case my other 2 backup recordings fail me. Three-mans are illegal in most states. I don't know. Well, the three-man I'm talking about involves dice and maybe a little bit of Coca-Cola or a Kool-Aid. I don't know. Okay, so Serge, my good friend Serge Berger, he is thesteadytrader.com. If you don't know him, go look him up. Tonight he's going to be talking about candlestick patterns, so I'm going to make him the presenter. He'll have the mic for 1 hour, so I'll take it back from him at the top of the hour, actually, so we can try to stay online. It took a couple of your minutes, Serge. I'm going to make you the presenter and then make you the organizer, and that will give you control of the situation. And we'll do a quick audio test. All right, Serge, so when you're ready.
Alrighty. Hey, Jeanette, can you hear me?
YOLO, I can hear you.
Perfect.
Can everybody else hear Serge? Okay, somebody give me some yays.
Yeah,
somebody give me some
can
RTR.
you hear and see the screen? That would be awesome.
I can see your screen. Right, let me see if I can see your screen on my other screen. Oh my gosh. So what do you do when you have this stupid pop-up that keeps coming on your computer? I'm gonna kill it. It's my kids. They download this crazy stuff on the computers, and then next thing you know, all kind of stuff happens. Stuff you didn't even anticipate.
It's always the kids' fault.
It is. Look, I'm gonna blame them. I recently had somebody say that there is no finish line with children, and you know you have that thing in your brain where you think, okay, I'm almost there, almost made it. And no finish line. I'm gonna go with it. Okay, all right, Serge, so I'm going to turn the mic over to you, and I'm going to mute mine. You have 1 hour.
All right, thank you. Thank you, Jeanette. Hey, traders and investors. My name is Serge Berger. I'm the founder of thesteadytrader.com. You made a great choice to attend this webinar tonight. I help traders and active investors reach a level of consistent profitability that they never thought possible. Did you know that the reason why most traders are not making money is because they overcomplicate things? That's right. Most traders actually make things way too complicated. Well, today I will show you a highly profitable 3-pronged trading approach that has not only made me a ton of money over the years, but has also allowed hundreds of traders just like you to live a life of financial freedom by reaching consistent profitability. How would you like to be able to get up in the morning and not care which direction the market is heading, because you know you have a simple, trustworthy, and repeatable process that consistently keeps you on the right side of the market? Furthermore, how would you like to be able to do this from the beachside hotel room in Hawaii or your slopeside hotel in the Alps? Well, that's a very realistic lifestyle to have if you learn to follow this straightforward three-pronged trading approach that I will show you today. Financial freedom is what many traders aspire to, and my three-pronged trading approach has allowed me to live a wonderful lifestyle where I spend part of the year in Florida and the other part in Switzerland. Success as a trader is really not that difficult, and with the approach that I'll show you today, everyone can do it. Over the course of my nearly 20-year trading career, it's been a long time already, I have worked both on the sell side at JP Morgan as well as on the buy side, and thus I've seen multiple asset classes. I've seen some of the best traders and investors at work, and I have been able to really see how the markets truly work. And I can tell you that the things I've learned from being both on the sell and buy side are going to be revealed tonight to a good extent. So now, as a managed account trader, advisor, as teacher, and speaker, I'm able to pass all this knowledge on to my clients and my audience. So keep it simple. Trading and investing does not have to be complicated. As I alluded to before, most traders and investors truly overcomplicate things. And what they do is they look at way too many conflicting data points. And especially in this day and age where we're being bombarded with different news bits seemingly every second, and the advent of social media, it's all the more important that we keep a straightforward process. So we need to eliminate the noise. That's really, really important. In fact, the more straightforward your process, the easier it is to stick with it. So the best professional traders that I have met over the course of my 20-year career have a very simple but a repeatable process. So again, trading and investing does not have to be complicated. What I'm going to introduce to you guys tonight is a highly effective and repeatable three-pronged trading process. Everyone can do this. There's absolutely no doubt about it. And quite frankly, as you'll see at the end of the presentation, this will truly change the way you will look at financial markets. Before we start, though, I want to do a quick exercise with you guys. I think it's always important to kind of reevaluate ourselves and kind of see where we are in our skill set, and this is in general for life, and certainly in trading, this is a good thing to do. So I devised these 3 steps, and you can sort of answer to yourselves which level you best fit in. And the reason we do this is because you want to be able to be honest with yourself, so you keep being open to new information. So the first level is at the beginning level. You've probably been reading and studying about markets, but you've never actually made a trade. If you have been trading for 1 to 3 years, but you don't really yet know what's going on, and you have an account, but you're going through sort of the initial emotions of fear and greed, then that's probably you. If you've been doing this for more than 3 years and you're still losing money, or at least not making as much money as you'd like, and you've probably spent some time and money on this in some way or fashion, you're probably in level number 3. And I've found over the course of my 20-year trading career that most people fit into one of these 3 stages. So, in terms of the agenda, today I will explain to you why identifying investor mood or emotions is absolutely critical to success as a trader and investor. I'm going to show you how to consistently find the highest probability points to buy any given stock, index, commodity, or currency. I will then tie all this together and give you the blueprint to this amazing three-pronged trading and active investing approach. And finally, as a bonus, I will reveal my absolute favorite option strategy that you can implement right away to generate monthly income. So I hope you're excited. Let's do this. So I assume a good many of you are familiar with what candlesticks are. So I'm not going to go through a textbook definition of what they are, but rather I can give you an angle that you may not have heard of before, and I think is going to make a huge difference, not only in just the bottom line of your trading results, but also just in the way you look at financial markets. First of all, I will tell you that most people that use candlesticks and most books and professionals that talk about this all the time way overcomplicate the matter, because the fact is that there's really only a couple of real patterns that can actually exist. So there are too many patterns to learn them all, because quite frankly, most of them don't really work and don't really show up much. So shocking as it might sound to you, I just use the most profitable ones. And those are the ones that show up a lot and simply work. Okay? So just for a bit of a reference point, so you see, in case you haven't seen candles, essentially what we have is a 4-point relationship. And for today's purposes, for today's presentation, I'm going to be talking about daily time frames, not 5-minute or weekly time frames. These are each 1 day of price action. Okay, so you have essentially 2 possible candles you can have. You can either have a down day, which is the example here with this black body, or you have an open and a lower close, but an intraday range that extended beyond these 4, the open to close range, right? So the little tails up here we refer to either as tails or shadows, and then this part in the middle is what we call the body. The other thing you can have an up day, okay? You have an open, a higher close, and again an intraday range that extends beyond the daily open to close range. So the most important part of this 4-point relationship, for the purpose of my discussion and for purpose of my 3-pronged trading approach, is the close of that candle. And again, for purpose of today's discussion, it's the daily close. The other thing about candlesticks is that they are very visual. If you are one of these people that have an easier time learning something by seeing a series of pictures, like my 3-year-old daughter, then you are in the majority of people. And so candlesticks, given how visual they are actually easier for most people to look at markets and understand what's going on. So the benefits of the candle are that they're more visual than the bar or the line chart. If you're using line charts are best used for plotting something like a GDP or another economic data point. And I think if you've been using line or bar charts for trading, then this is going to be a real treat for you, what I'm going to talk about today. But more importantly, what candles do is they represent price action through the lens of investor sentiment and footprints, or vice versa, depending how you want to look at it. So candlesticks really just work. It's the formations that matter, and they're really easy to spot once you're trained. The best thing about it is that it's all about the decision making without emotions. You have extremely defined risk and clear stops every single time if you do this right. Just like this person here that's walking along this cliff, you can see this person has a pretty clear point where there's a point of no return, or at least a point where his risk dramatically increases. And it's the same thing with candlesticks. We have this visual representation of getting into trades that before we get into the trade or investment or whatever you might be looking at from time frame perspective, we actually know exactly where we would need to get out. Okay, and that in and of itself, if you take nothing else away from today but this, that in and of itself is just hugely important to understand. But you'll see how wonderful this and straightforward this approach is in just a minute. So let's look at some type of candles to give you guys a good understanding of what I'm talking about. One type of candle you can look at is called a hammer candle. And essentially what you have, it doesn't matter whether we're looking at an up day or a down day. I'm just going to take a look at number 3 here, this formation here. Essentially what you have, you want to look at for hammer candles at the bottom of a swing or a bottom of a trend or near the bottom of a trend. What it's telling you from a price action perspective is that on this day, the market opened here, okay? It closed down here, but on an intraday basis, it rallied, it fell all the way down here. So when it was all the way down here, something happened and price reversed strongly, giving us a fairly strong close. All right? Now that's the way to look at it through the lens of price action. Let me give you a different perspective, and this is the key. Let's look at this through the lens of investor emotion or investor psychology. What does it tell us? And we'll go through a whole bunch of examples in just a minute. What we're seeing here is that after a downtrend of whatever was a few days, weeks, months, the bears could no longer keep the market lower. They ran out of sellers. So there was only one way to go, and it was higher. So bears essentially capitulated and no longer had any power left, so the bulls took over. So it was the point of maximum bearishness, basically, right? With no more bears, no one left to sell, there was only one way to go, and that was back up. The other candle you want to look at is what we call an engulfing candle. Very simple, very straightforward, and extremely visually obvious to spot on the chart. Again, I focus on the emphasis of simple and visual. So the engulfing candle can take place either in an uptrend or a downtrend. In other words, either at the top of a trend or at the bottom of a trend. If you're looking at this example here, this is what's called a bearish engulfing candle. Now again, let's look at it through the lens of price action. What do we have? We have this price this day, then the next day the stock open. Let's assume it's a stock, right? Could be a commodity, could be a currency, could be whatever, but I'm going to use stocks for the purpose today. So we had a higher open, but something happened intraday that completely reversed the price action. Not just a little bit, but it completely engulfed the previous day's open to close trading range. So that's what it's telling. So that's what price is doing, right? But let's look at this again through the lens of investor psychology. What's it telling us? Well, it's telling us that bulls were quite giddy right at the open. They bid the stock higher, but something happened, and there was a big reversal, right? So if you look at it through the lens of investor psychology, what it's telling you is that buyers most likely just completely ran out of bulls, right? So the bulls got too greedy. There was nowhere left to go. They had to capitulate, and the bears quickly took over the game. Same thing happens in a downtrend. Let's say this is the bottom of a trend. You have this trading day here. Then the next day the market gaps lower, but quickly reverses back up, completely engulfing, in other words, nullifying the previous day's price action. So what happened? We had bearish capitulations. The bears failed to keep the market lower, and the stock rallied very strongly to the upside. For directional investors, which is the majority of investors out there, from retail to professionals, we essentially have 3 possible time frames that we can choose to play in. We can either choose to be a buy and hold investor, a long-term buy and hold investor. We can try to day trade, or we can do something in between that most of us have time for, and I define that as swing trading. That is what we're talking about, time frames of a couple days to a couple weeks. Let's look at this relationship between day and swing trading a little bit more closely. If you are day trading, you are obviously trading within the day, so you have to open and close the trade within the day. It's very hectic. It takes a certain personality. There's a lot of high frequency trading and algorithms that are constantly going against you and stopping you out. The news can stop you out of the market. So it's a very intense market environment, and I certainly would think it's not for beginners. On the other hand, there's swing trading, which is a sweet spot in terms of a comfort zone in that, most people have time for this, right? Whether you have a part-time job, full-time job, whether you're retired, semi-retired, mother, whatever, most people, I would argue almost everyone has time for this. But it's also a time frame where most people find very, very uncrowded trades, because by definition, the longer-term institutional investors can't trade in the 2 days to 4 week time frame because it's too short. And the day traders, for them, this time frame is too long, right? So you have a wonderful time frame that you can play in. So, having said all this, let's look at some examples. And I'm going to blow up this chart a little bit more on just the next slide. Just give me a second. Let me quickly go through these bullet points. What you have here is the S&P 500. And what we saw is a waterfall sell-off, followed by exhaustion selling, followed by a strong bullish reversal, followed by bullish continuation buying. Okay, let's look at this more closely. This is the S&P 500 in October 2014, so last year. And whether you recall what happened or not doesn't really matter. What we had was a strong downtrend. Okay? And somewhere near the bottom is, or what ended up being the bottom in hindsight, was we saw these long exhaustion candles, very much like those hammer candles that I just showed you. And we saw 2 in a row. Now, from a price action perspective, again, we can say, all right, well, we just had, the price went back up intraday. Nice. But look at it through the lens of investor psychology. What is it truly telling us? It's telling us that the bears completely lost control of the price action, and the bulls ultimately won this game by the follow-through buying day that was here. So this is what we call a bullish reversal. Reversals, as you'll see in the next few examples, are a 3-step process. You have a downtrend, so a waterfall downtrend, some sort of exhaustive price action that has then given us the okay to buy, in this case, with a follow-through buying day. All right? And the 1, 2, 3 step process is really important to understand. Okay? Bottoms tend to be V-shaped, whereas tops tend to be processes. All right? If all you do is follow this 1, 2, 3 step reversal process, I can promise you become a profitable trader overnight. Let's look at more examples. This is the KBW Bank Index, BKX. Again, we'll blow up the chart in just a minute and look at it more closely. But again, what we had is a bottoming process followed by exhaustion selling, a strong bullish reversal, followed by bullish continuation buying. All right, a 1, 2, 3 step process. That is what reversals take. So look at this. What we had was a downtrend, followed by some sort of bottoming formation, but nothing explosive quite yet. Then we came into this day, and this, by the way, was early October 2015, just a few weeks ago, essentially. And look at what happened on this day. The market tried to push this index lower, back below its August lows, but that lasted for a few minutes. It then pushed back very strongly back higher. Ultimately, we had a follow-through buying day the next day, and it was off to the races. Okay? 1, 2, 3 step process. If all you do is this, I promise you become a successful trader overnight. Let's look at another example. Let's look at gold. This time we're looking at a bearish example. This is the gold trust, the GLD. All right, and again, we'll blow up the chart here a little bit more closely in just a second. What we have here is a topping process, followed by exhaustion selling, followed by a strong bearish reversal. Okay, let's look at the chart. And ultimately, you had follow-through selling. Let's look at this. You had an uptrend here for a couple of weeks that exhausted itself. And while we could arguably say this in itself already was a warning sign up here, and this is this would have qualified. The real strong bearish reversal you wanted to look for was this thing here. Okay? This was a day when gold tried to rally intraday, tried to somehow try to retest these highs up here, miserably failed and completely reversed, not only engulfing the previous day's price action, but the entire sequence of the past few days. Very, very bearish. We then had a follow-through selling day, and it was lower, lower, lower. One more example. This is a single name stock now, Hewlett-Packard. What we have here is a downward sloping channel, a bullish hammer candle, and ultimately a bullish reversal candle. Let's look at this more closely on the daily chart. Hewlett-Packard. Okay, this chart is from some time ago. We had a downtrend, and then this unusually weird, like almost creepy sort of price action that just told us that something was off, right? But that's not enough. You need something more clear. You need bearish capitulation to come through. So what we saw here is the bears tried to push this market lower, right? Failed to do so, quickly reversed it higher by way of that bullish hammer candle that we talked about before. And the very next day, a big, and I mean a huge rally on to the upside, fully rallying past the entire 2 weeks, 2 or 3, whatever weeks it was down here, price action, and then was off to the races. Okay? Reversals are a 3-step process, guys. But this is particularly important and particularly juicy at the bottom, because bottoms tend to be V-shaped, whereas tops tend to be processes. Okay? Very important. This is the kind of stuff that I learned on the trading desks for many, many years, and I can tell you, institutional guys that are really, really good keep it simple like that, but very repeatable. Now, you've seen the examples, but what the institutional guys really do, and what I did at these trading desks, and the best guys that I know do this every single day, they have a 3-step process to this trade. So we looked at the technical aspect of it, but there needs to be another layer. We need to be able to qualify these trades somewhat. So step 1 is always to have a solid understanding, but not too detailed because you don't want to confuse yourself. They have a solid understanding of the broad market structure. For the most part, what that means is monetary policy. We need to have a basic understanding of what's going on in monetary policy. Are we in a hawkish environment, dovish environment? Is it just choppy? They don't know what they're doing. These are all different types of environments, and we need to be aware of what's going on because that's going to directly affect stocks and in general markets for the most part. So I have an understanding of that. Once you have that, step 2 is to look for things, asset classes, sectors, if you're looking at stocks, and single name stocks that are trending in the favor of this broad market structure. Okay? Very important. Step 3 is the candlesticks that I just showed you. All right? So what you'll see is that we are essentially qualifying a trade in either direction. We can start with step 1 and go step 2 or step 3, or we can find a bullish reversal leg, for example, I just showed you before the S&P, and then go back and see if it fits the step number 2, whether it's in the broader direction, and also step number 1, right? That's what makes a really high probability trade, and that's what the institutions do. I promise you, I've seen this for many, many years, and I've done it on these trading desks. Okay, it's simple, it's repeatable, but it really, really works. Okay? Let's look at some more examples here. This is the S&P 500, the chart that I just showed you before, that bullish reversal in October 2014, but this is now a multi-year chart. Okay? Step 1, broad structure. What was the broad market structure like at that point? Well, it was still very hot, very dovish, right? Fed was still very supportive, economy was still kind of muddling along, but everything's kind of okay. Look at what happened. This is that bottom that I just showed you in the S&P 500 before. Look at where it bounced to. It bounced to the longer-term uptrend line, the 2011 uptrend line. So it was very much in line with step number 2 with the broader market structure. Okay? And step number 3, as you saw before, was the analysis of the bullish reversal of the 1, 2, 3 step reversal on that daily chart. Let's look at another example. The bank index. Same example. This is the same chart that I showed you before, except now we're looking at a multi-year time frame. Okay? This was the bullish reversal just a few days ago, just a couple of weeks ago, okay? Look at where the bank index bounced to in, I guess this was early October 2015. It bounced right into lateral support on a multi-year level. And what happened? The Fed was starting to get a little bit more hawkish, right? Which was actually good for banks. Even though the yield curve actually flattened, but that's besides the story, it was hawkish for banks. In other words, good for banks. And step 3, as you saw, we had the bullish reversal. This is, guys, is how you qualify these trades and turn what looks to be a good setup into a super high probability trade. The next one, gold. Same chart I showed you before, except now we're looking at it from a multi-year chart. This is the downtrend channel. Of course, gold topped in 2011. What we have here is this last blue dot here. This is where that bearish reversal took place on the gold chart that I showed you before, on the chart of the GLD. And guess what? This coincided with a renewed dollar rally. Okay, that's step number 1. That's bearish gold, at least in this environment. From a technical perspective, this occurred right at a multi-year trend resistance line. And so step 2. And step 3 is the bearish reversal that I showed you on that daily chart. So 3 steps to the trade: step 1, step 2, step 3, and you have a super high probability trade. Last example on a single name stock here, Hewlett-Packard. This is again the same chart I showed you before. Step 1, and this reversal that took place was 2013. At that point, still a very hawkish, dovish environment. Everything was supportive. We had a stock that pulled back into the direction of a trend that it had been going in for, I guess, 6, 7, 8 months, retraced nicely, and ultimately a strong bullish reversal right down here that was coincided with a 50% pullback in the direction of that trend. Very, very high probability stuff here, guys. So let's look at the bonus option strategy, and there's a lot more to show. I'm going to give you tons more examples here. Just want to go through the option strategy first. When you look at the world of options, there are tons of strategies out there. But I'll tell you the one strategy that we have used a ton on both the sell side desks at JP Morgan and the buy side desks I've worked at is the following. We would look for stocks that rally way too strongly. Okay, way too strongly, or it could have been a bond, for example. And when in this case a stock goes from a steep slope to a vertical slope, you can sell far out of the money call spreads because the premium is so high, particularly when you're looking at one of these chaser stocks like a Tesla or an Amazon.com. You get high implied volatility, which is sort of counterintuitive if you have a market going up. So what you want to look for is a stock that goes from a vertical slope, from a steep slope to a vertical slope. Amazon.com, Netflix, Tesla, these things do it all the time. You then look for a strong bearish reversal and exhaustion selling, very much like I showed you on gold before, and either any of these candles will do. And then you can go out and sell far out of the money call spreads for incredibly juicy premiums, literally like 10, 20, 30% out of the money, 1 to 2 months out. I do these strategies every month on at least a few stocks or other instruments, and it's a beautiful way to generate income on a monthly basis. Okay, so take advantage of the extremes in investor sentiment, either bullish or bearish. Take advantage of fear and greed, because that's where the absolute maximum opportunity is, and that is exactly where the best probability and the lowest risk is to get into trade. That's what the institutions do. That's what the best traders in the world do that I've worked with throughout my career. So in summary, for this part, candles will show you investor footprints and emotions. Make sure you get a good solid handle on when investors get greedy and fearful. The best institutional traders that I know have a straightforward and repeatable process, and that is the key to consistent profitability as a trader and active investor. The three-pronged trading process is as follows. Understand the broader market structure, respect it, look for stocks that work in, or commodities or whatever, that work in the favor of this trend, and then use the 1, 2, 3 reversal as the trigger. And again, you can go vice versa too. You can start with step number 3 and work your way back. But do all 3 steps. That's really, really, really important. So now let's do some Q&A. Okay? I'd love for you guys to show me some tickers, show me some things you want to look at. Let's do a few live examples. I'm going to start off with one real quick, just to give you guys a couple of examples. Let's take maybe 3, 4 stocks here, guys. But I'm going to start off with an example here in the Russell 2000 ETF. Okay, don't have to go very long, and we can look at any time frame here. Okay, I'm just going to look at something very, very nearby, and you will see how many very strong bullish reversals we just had take place just over the past few days. Now, these are on an intraday basis, but it totally doesn't matter what the time frame is. Okay, you tell me if you see something familiar here. I'm just going to use this arrow. Downtrend, bearish exhaustion, boom, back to the upside, bullish confirmation. Downside, bearish capitulation, confirmation day, or in this case, moment confirmation candle. All right, you guys see how that works? Very straightforward. Guys are asking me a couple tickers here. Let's take 3 tickers here for right now, and then we'll do other stuff. Let's take Caterpillar. All right. How about Caterpillar? What's Caterpillar doing? Let's just take the most recent example here. Very simple. Look at this. Very nice example. And this is just someone just typed this in. I'm not cherry picking anything here. Downtrend. We had a slowing down of the downtrend. Ultimately, we had the bears. You could see they basically lost control, but the confirmation day did not really come, in my opinion, until up here. Okay, this is still early days, right? This trade still may work higher from here, but we had an outside bullish reversal day and a bullish engulfing day followed by follow-through buying. Someone on the other ticker, Apple. Apple is sought after. I see you guys are still very into Apple. That's good. Apple's a good one. All right. So you tell me what happened here. I said it before. The most obvious and best points to get into a trade is when you have a reversal. Okay, and they tend to be the most visually obvious candles. Now you look at this chart just from here to here. What's the most obvious, visually obvious day to you? I think it's pretty clear. It's this day right down here, right? That was, by the way, the late August lows. So what happened? We had a waterfall sell-off, and let's think about this day. What happened on this day? Well, the bears tried to push this market lower, and they did. But ultimately, the bears really rallied back strongly. Now, to me personally, I wouldn't have bought just yet. I would have liked to see some sort of bullish confirmation. And we had bullish confirmation 2 days later. So again, step 1, waterfall sell-off, bearish capitulation, followed by bullish buying, so follow-through buying day. Step 1, 2, 3. This is not hindsight, guys. I know some guys saying this is not hindsight. This works. I've done this for nearly 20 years. This is how it works. Okay? Let's look at one more example. Look at the OIH. Yeah, someone's putting in OIH. That's a good one. All right. What's OIH doing? Look at it through the lens of investor psychology, and we're going to go through a ton more examples here. Okay? The OIH is the oil services sector. Okay? So waterfall sell-off, and here already we had a couple bullish reversals. So look at this. Now, this is not a type of reversal I showed you before. It's a different variation, but it's the same exact thing. And that's why I'm telling you, don't get too caught up in all these crazy different names for candles. It doesn't matter. Okay? The institutions don't do that. I'm telling you, I've done this for too long. What's important here is to understand what happened. We had, on this day, okay, the market tried to push lower, ultimately failed, and then it failed for a couple days, but ultimately had a strong bullish reversal. Now, yes, the market came back and nearly retested those lows, but it didn't. It made a higher low, and look at what it did at those higher lows. A very strong bullish outside reversal day that was followed through by buying. Now, this chart isn't done yet, right? So we can't see how much it's going to turn out. But already, if you would have bought here, you would have already had a decent trade. All right? So we'll go through some more examples here in just a second. Albert Einstein once said that the definition of insanity is repeating the same behaviors and expecting a different outcome. And how does it translate over into trading? Well, a plan to increase your accuracy and reduce your risk in your trading starts with knowledge. You have to have an understanding of how the markets work. So in my pro trading course, I go into great detail of explaining to you this institutional three-pronged trading approach that I have learned on the desks of JP Morgan and other desks on the buy side. It's all about a low stress, high probability, and repeatable swing trading method. And it's all about nailing these bullish or bearish reversals by correctly reading investor sentiment and emotions using candlesticks and other things. Normally, this course is $199, and it does include a 30-page course guide that has tons of examples, and you can use it either as a standalone or along with the course. But today I'm going to offer this course for just $97. You can go to thestudytrader.com/now. So that's www.thestudytrader.com/now, or you can call 859-963-3445. Also, I'm going to offer you a 30-day money-back guarantee. There's no risk at all for you to take this course. No questions asked. If for any reason you're not satisfied after 30 days, we will refund you money. Again, it's just $97, www.thestudytrader.com/now. So who is this course not for? It's probably not for traders that can't be patient and disciplined in their trading. It's not for traders that are looking for someone to tell them every little thing, when to do it and how to do it. It's really not for traders that are unable to make their own trading decisions. And the reason is because even though you might be following and using my three-pronged trading approach that is wildly successful, you are still your own person. Every trade is a little bit different. Everyone's got a different personality. So you still have to have your own little rhythm of doing this. So that begs the question, who is the course for? It's for traders that want to be able to make their own decisions when trading. And moreover, it's for traders that want to reach financial independence by understanding how markets truly work. So disciplined self-starters who can follow a three-pronged rules-based trading approach are going to feel right at home with this course. I know that you may have purchased a course or a trading or investing course before, and so you may be thinking, why do I need this? Don't let your mind go there. Be open to new information, because this course will allow you to see financial markets much more clearly and lead you to execute only high probability trades. There are many out there who offer courses on trading and investing, but this course is very different. The three-pronged trading approach that you will learn in great detail in this course has allowed me to live a life of financial freedom and has already helped many others achieve the same. But don't just take my word for it. Look at what Brian Ragwalski, he's a vice president at R.J. O'Brien, had to say. Brian said, "The Study Trader provides in-depth technical analysis unseen on other sites. The thorough explanations on the intricacies of technical investing have made me a better investor and trader. Everyone can learn from the observations being made and the transparent strategies given." So what else are you going to learn in this course? You're going to learn the institutional three-pronged trading approach that I just gave you a blueprint of here over the past 35-40 minutes. You're going to learn all variations of this bullish and bearish reversal pattern that I showed you. All of them. You're going to learn how to use candlesticks to trade both in the direction of the trend as well as against it. And I promise you, you're not going to have to learn hundreds of candlestick patterns with weird and funky names that don't really mean much. What you're going to learn is my famous rocket launch and gravity pull setups. Again, institutional stuff. And very importantly, you're going to get a great detailed knowledge of the probability enhancer, my multi-time frame analysis, and confluence zones. If we take the setups that I showed you and we then overlay an additional layer of analysis with multi-time frame analysis and using something called confluence zones, we take what already are dramatically high probability trades and make them even more high probability. We're also going to go through sideways channel breakouts, wedge or flag pattern breakouts, and those types of things that you may have read before, but I'm going to give you guys how this stuff really works. It's an 11-part video series that is very straightforward, and it includes a 30-page ebook. Okay, the video series is broken down into individual segments, so you can look through the different things. It's not, you don't have to watch one long 10-hour video, but it's an 11-part video series, and I'm going to show you guys how these wedge patterns and all these things that you may have read about before truly work. Because most of these academic books are just that. They give you a textbook definition of this stuff, and it doesn't truly work. I'm going to give you this how the pros use this. Okay. We're also going to go through a couple other things. For example, where to set your stops, very important. A sound risk management strategy, right? It's all about risk management at the end. And we're also going to go through the mental aspect of trading, all right? Very, very important. Mental aspect of trading, just like money management, which we'll also cover in the course, is all included here. All right? So in short, if you want to become a consistently profitable trader, you need to take this advanced course. Again, you can go to www.thesteadytrader.com/now or call the number below. So let's take a few more examples. I'm going to walk through more. Maybe you guys can give me some more tickers here, but I'm going to show you guys a few more things. Let's look at, for example, I don't know what's on my mind. Let's maybe look at Facebook. All right. So Facebook, very similar to that Apple chart before. Look at this little candle here, right? Or actually, a very big candle. What's the psychology behind it? Forget the price action, forget the fear and all that. What actually took place? Well, we had a strong downtrend, and forget what the broader market did. That's not important at the time, because we all know this was the August crash in this case. But look at what happened. We had a downtrend already for a couple days. We ultimately had the bears come in and try to push this market lower. They succeeded, but for not for very long, and the market rallied back very strongly. 2 days later, just like on that Apple chart, we had a very strong bullish reversals. Now we can go into and look at, dozens and dozens of other examples in here, and you'll see they all look very much the same. Let's look at a couple more. CMG, Chipotle, right? So for Chipotle, which stock that has been in a pretty nasty downtrend for a bit and never really recovered from the August highs. Let's look at the more visually obvious stuff here when it was actually trending higher. All right, let's look at some of these real bullish reversals at clear support areas. All right, look at, for example, let me go through something that we just covered before with the same patterns we talked about before. Let's see here, 1 second. Let me just zoom into it a little closer. And you can see, for example, what happened here. All right? We had a waterfall sell-off, right? Ultimately, the bears tried to push it lower, and the key here is the bullish reversal, right? It's really important to have a strong bullish reversal, not like just a half-ass, for the lack of a better term, but a real good, strong bullish reversal, because what that does is it really confirms to you that this was a capitulatory low, okay? So that's really important. Someone's asking about KMI. Kinder Morgan. All right, so again, this obviously has been in a downtrend. There's not a whole lot to do here just yet as far as I'm concerned. It's still in a downtrend, so we want to look for it when this thing was still trending higher. So let's look at some capitulation lows. For example, here, what do we have here? Same thing happening, right? We had a stock that was literally waterfalling down. We had 2 attempts for this stock to push lower 2 days in a row. So that's your bearish capitulation followed by a very strong bullish reversal day, right? If all you do, guys, is focus on these extremely high probability 1, 2, 3 step reversals, if that's all you do, I promise you will become a successful investor tomorrow, but you have to do it right, and you have to learn how to read some of these patterns. It's very straightforward, but don't make it confusing because most people make it way too confusing. Look at the next low here on Kinder Morgan. Look at what happened here. Oopsie, let me drag this here. We had a little bit of a waterfall sell-off, and then we had this day where the bears tried to push the market lower, failed to keep it at the lows, didn't keep it at the highs either, but the very next day, a very strong bullish reversal. Okay? So, some questions here. People are asking, how do you scan for these things? For one, I've done this for a long time, so I know what to look for and when. But the way you look for them is by having the 1, 2, 3 step process to the trade that I showed you, okay? That's what the process is for. You get an understanding of the broader market, you make sure you trade in favor of that market, and then you look for these reversals, just flipping through charts. But you can also reverse it. Let's assume all I saw was this bullish reversal in KMI, right? I would then go back and check the process. Step 2, is it still in the trend of the broader market? And then step 1, does it hold true with the broader monetary policy and the broader sort of economic growth picture of the market? This works, yes. Alberta's asking, does this work in Forex and futures? Yes. Yes, yes, and yes. It works in all asset classes. I've traded all of the major asset classes professionally. It works in all time frames. You can do this intraday if you want to. I'm not an intraday trading advocate, although I do some of it. Just because I think the probabilities are kind of stacked against you, but it definitely works intraday. Let me give you an intraday example. I just showed you the IWM, the Russell 2000 before, just so you see that I'm not just making. Actually, let's look at the S&P 500. It gave us a beautiful bullish reversal today. Let's look at like a 15-minute chart. Okay, SPY. All right. Oopsie. Let me quickly get that chart back up. And by the way, guys, let me quickly just go through this, and then we'll go through this chart. Again, the pro trading course, it's all about teaching you this 3-pronged institutional trading approach. It's all about a low stress, high probability, but repeatable swing trading method. I tell you, when the pros come into the office in the morning, like I did when I worked at these institutions, we come in, we have our setup, and we only trade the setup that we know works. There's no reason to look for stuff that's not working. It's all about sticking to a system. The course is usually $199 and includes a 30-page ebook with lots of examples, so you really get to know the details. It's an 11-course video series. It's just $97 today. You can go to www.thesteadytrader.com/now. Let's look at this example. This is today, guys. Okay, I'm honestly not literally just I just remembered that we had a bullish reversal today. Now, you tell me if this does not look familiar to what I just showed you over the past what has it been now, 40 minutes or so. We had a waterfall sell-off, okay, from yesterday's highs into this morning's lows. We have bearish capitulation, right here. But that in itself, that's nice to see, but that doesn't mean anything, right? What you need to see is the bullish reversal candle, right? That 1, 2, 3 reversal is your key, and then it was off to the races. Now forget that this was intraday. It doesn't mean anything. This can be on a weekly chart, daily chart, whatever. Okay. Any other tickers, guys? I'm happy to take. Let's say one more ticker, one more stock to look at. If anyone has one more stock, I'm going to look at. Let's see what else was AAL. Someone wants to know American Airlines. All right. So the obvious one is here, right? This is the August lows, but let's find a different one, okay? Because we've talked about this August reversal. Let's just let's take this one for example. What happened here? Okay, this is the March 2014 bullish reversal. What happened? Okay, again, forget the price action. Just look at it through the lens of investor psychology. All right? And we had a waterfall sell-off, right? You know what? Let me get this error. Waterfall sell-off, and then what happened? We started seeing these long tails emerge, right? What are they telling us? They're telling us it's time to sit up and take notice. We have this strong bearish capitulation followed by bullish buying. Okay? All right, guys, I think that's all the time I have, but I think you can see that this is a very repeatable process. It's no hocus pocus.